For more now on this Chinese rate hike, Bloomberg News reporter Paul Panckhurst is on the phone. He covers China's economy from Hong Kong. Paul, we talked about this being the second rate move this year and the fourth since October. How is the market reacting? Is it suggesting at all that traders and investors think this will be enough to tame China's inflation tiger?
The assessment we're getting so far from analysts is that maybe China has done most of the work that's required. There may still be another rate increase later this year, but the forecasts are for inflation to moderate. So perhaps the heavy lifting is mostly behind us.
Now, how about the timing? Clearly, there are fears in China. People are very concerned about the impact of that Japanese earthquake. We've heard about all the stories, distribution of iodine pills and salt, et cetera, and also the economic situation that continues to play out in Europe. Is it at all surprising that China moved this soon after the last interest rate hike to tighten borrowing conditions?
No. If you look at the previous interest rate increases, if you call them up on the system and have a look, you'll see that today or next week was exactly when you'd expect the central bank to move. They've been moving in a very predictable way, and according to forecasts, there's also a very ugly inflation number for March, a number of over 5%, which is going to be announced later this month. So they're stepping in before that figure is announced to show that they're acting.
So, Paul, if the Bank of China moves like the People's Bank of China moves like clockwork, when might we expect to see the next rate hike?
Well, I think that's more difficult because the economists are forecasting only another 25 basis point increase for the rest of this year. So your guess is, I think anyone's guess is as good as anyone else's on that one.
All right. We will obviously have to try and read the tea leaves, so to speak. Paul Panckhurst covers the Chinese economy from Hong Kong with Bloomberg.